Alrighty, what is going on, everybody? Welcome back to another CYPRX video banger. In today's video, we're going to do a macroeconomic update, some things that we had been talking about and mentioning on the CYPRX platforms that you all should be paying attention to as risk asset investors. Then at the end of this video breakdown, make sure that you stick around. We're going to go over some dollar charts comparable to, I'm going to use Bitcoin as an example, what I think is going to happen in the near future and what you should be paying attention to given the recent dollar strength that we have seen in the markets over the past couple of weeks. So if you enjoy these video breakdowns, make sure that you smash that thumbs up button and subscribe to the platforms. We do appreciate the love and the support. Real quick, some things overall. Before we get started, I just want to talk about real fast, 2 tweets just to give you guys some motivation and some inside perspectives as to our mindset here that we have at CYPRX. I'm going to try to keep this video breakdown as short as possible. But again, remember, this is going to be jam-packed with information. We don't toot fruit around. We give you guys the valuable info that you all need. And I'm going to show you that in today's video breakdown. Over the course of the past couple of months, we had been one of the only influencers and social media platforms on the internet, especially in the crypto sphere, trying to warn everybody not to be too greedy and that we were potentially on the verge of a massive pullback in the digital asset space. So I said to you all, remember, success in trading and investing comes from a combination of knowledge, discipline, and humility. Stay focused on the journey, learn from every experience, and adapt to ever-changing dynamics of the financial markets. That's the first thing I want to say to you guys before we get into today's video breakdown. The second thing is, I said to you all that you can make things crystal clear in the market for people through research, fundamentals, and technical analysis, and they still won't get it. Most likely, this is due to the lack of their ability to think outside themselves and their own intrinsic opinions about the market. Married bias and the inability to escape one's ego can be detrimental to trading and investing in a career. My advice is to be reactive. This is important right here. Be reactive to changing market conditions. Be ready and willing to accept knowledge and information from people with more experience than you. Growth mindset always wins over the closed mindset, right? So just take that into consideration as I show you all this information and things that we have been talking about here at CYPRX. So before we even get started on all the fundamentals that I have pulled up for you all today, let's just go over the market recap that I personally type out and send in our private community. Again, if you want access to this information before it hits our social media platforms, where we send it out ahead of the retail curve to keep our community updated and in the loop with what's really important in the markets, visit CYPRXtrading.com. We'd love to have you. Our monthly subscription program gives you access to all things CYPRX and all the information that we provide in our Discord. And you can cancel that subscription anytime if you don't find it valuable. I highly don't think that you will. Most of our subscribers stay for a prolonged period of time. Again, visit CYPRXtrading.com if you're interested. So I said to the CYPRX community last week, just giving them a market recap, the US dollar exhibited a notable resurgence, gaining strength against various assets, particularly risk assets like crypto. Notably, a significant portion of the crypto market experienced a pullback from recent highs. This shift marked a departure from the preceding weeks when the dollar had shown signs of weakness. The change in momentum can be attributed to several factors, including the diminishing narrative of the Fed rate cut, positive economic indicators such as retail sales, jobless claims, and consumer sentiment from the U.S. data front, and hawkish comments from the Federal Reserve speakers. These comments supported the notion that the interest rates might need to be maintained at higher levels for an extended period of time, and the market might have prematurely anticipated rate cuts. So if you've been following CYPRX for some time, what had we been talking about in previous YouTube video breakdowns and on the X space to potentially pay attention to? Again, I'm going to show you in today's video breakdown that we have been trying to keep you all in the loop, trying and attempting to teach you all to be reactive to these changing market dynamics. Wednesday, we'll definitely be focusing on the PMI figures for both the UK and the US for some market volatility. While Thursday, we will see crucial data releases in the US, including GDP figures, unemployment claims, and durable goods numbers. And then additionally, Japanese data, specifically the Tokyo core CPI, will be coming out. And then our focus will be attentive to the highlight on Friday, which will be the US core PCE, right? So be paying attention to all of these things. Now, let me just go back in time and let's show you guys that here at CYPRX, again, if you're not following us, this is why you should be. Back on December 19th, here in the CYPRX private community, we realized and we noticed that the market was extremely greedy. Why? Because the market was pricing in the expectation of the Federal Reserve to cut interest rates in Q1 2024. I believe the market expectation as we ended 2023 was an 88% chance that the market, or excuse me, not the market, that the Federal Reserve was going to cut rates in either Q1 or Q2 2024. That percentage has dwindled down now to, I believe we're going to read a fundamental piece that says that that number is now at a 47% chance of a rate cut from the Federal Reserve. So it just goes to show you the importance of paying attention to the information that we're providing here at CYPRX, especially if you're a risk asset investor or a leveraged trader in the crypto markets. So I said to you all on December 19th, for crypto traders, always keep a watchful eye on dollar strength and any change in sentiment surrounding the rate cut narrative. This would be diminished by dollar strength and healthy economic data from the US, and any decline we see in crypto moving forward, we personally will be seeing this as an opportunity to dollar cost average, especially if any of the previous bearish targets mentioned, which I gave to the CYPRX private community, are met. Personally, I'm okay with my portfolio where it stands, so I will only be filling orders if these levels I mentioned in previous breakdowns come into fruition. So this just goes to show that here at the CYPRX community, we don't buy tops. We try to teach our community how to dollar cost average in properly once the market declines based off of macroeconomic conditions. Remember, right now, we are not in a utility-driven environment where these digital assets are being utilized for their underlying value and utility that they bring to the real world. They are being traded. 95% of digital asset transactions are due to trading activity. And when you understand that, that is where factoring in these macroeconomics and these conditions that drive either risk on or risk off market mood come into fruition. You really should be paying attention to this stuff until these market dynamics change. That means that the crypto asset class decouples from traditional asset classes, and we actually see these utility-driven assets used for what they're made for, okay? However, that is yet to come into fruition. So back on December 27th, moving forward, and what you'll notice is the dates that I'm putting out this information, right? So just pay attention to that, because what we are attempting to do here at CYPRX is show you all that we give this information way before it hits the mainstream, trying and attempting to keep you all in the loop. And when I say mainstream, I mean Bloomberg. We beat Bloomberg. We beat Reuters. We beat Forex Factory, CNBC, Fox News, okay? And I'm physically showing you that here. So take that into consideration via the influencers that you are paying attention to, and then what type of information we're giving here at CYPRX and how valuable that can be to give you a key advantage, regardless if you're a dollar cost averager or a leverage trader in crypto specifically. Okay. Again, remember, stick around to the end of this video breakdown. We're going to do a TA analysis on the dollar. I'm going to use Bitcoin as an example, but this goes for the entirety of the cryptocurrency market asset class as a whole and where I think it's headed as we get this economic data released from the US this week, Thursday and Friday particularly. So I said to you guys on December 27th, things that you should be paying attention to as a crypto investor. Why has the market been so bullish? Risk on market mood. Yes. The Bitcoin having an ETF obviously causing hype, but market is pricing in an 88% chance of rate cuts early March next year. So pay attention to any shift in this sentiment. And you're going to see from articles that I'm going to read that are up to date now. Remember, I put this information out to you guys almost a month ago, right? December 27, 2023. Global central bank stance on monetary policy is what you should be paying attention to. Fed comments, either dovish or hawkish. Most recently, they have been dovish, driving an increased demand for risk tolerance, hence the increase in crypto prices. Any hawkish comments would weigh on risk sentiment. And what have we seen over the past 2 weeks? Hawkish comments from the Federal Reserve, i.e. driving demand and strength back to the dollar, weighing on risk assets and the overall risk asset classes as a whole, diminishing risk on market mood, right? So you guys see that. U.S. inflation data. Any uptick in inflation would not be good for risk assets and would weigh on the rate cut narrative and bring back interaction from the Fed, i.e. rates higher for longer or possible rate hikes on the table. Labor market data. Any positive turnaround in labor market data would signal strength remains in the U.S. economy and bring a dollar rebound. These are just a few things to be paying attention to. Now, on the flip side, I mentioned to you all what we would want to see as risk asset investors. So this is also what we're going to be paying attention to today. So keep this in mind. As risk asset investors, we would want to see dollar continuing to weaken and stay below the 102.800 and the 98.300 historical psychological level. If you go back and you look at 2017 bull market cycle in crypto, same thing with 2020 to 2021. Where was the dollar at and where did we fail to break above on dollar strength that enacted a dollar sell-off and bull market cycles back in those years? Those specific psychological levels, the 102.8 and the 98.300. We're going to pay attention to the 102.800 in today's technical analysis breakdown towards the end of this video, right? Then inflation continuing to cool. We would also want to see that, right? The rate cut narrative coming back onto the table, okay, due to a decline in inflation to meet the overall goal of the Federal Reserve of 2%, bringing inflation back down to 2% and having it stay there for a prolonged period of time. Labor market continuing to see cracks from higher rates, i.e. higher unemployment claims, right? Weakening labor market data, more people filing for unemployment. If any of the above changes switch, get ready for a pullback in crypto. So I let you all know to be paying attention to a potential pullback on crypto. If you take this tweet on December 27th, the market was at a high and you paste it on the charts. We were one of the only people in the space telling you all to be paying attention to these things. Now, fast forward. Remember, these came out. I put these tweets out to you guys over a month ago. Now let's fast forward and look at some updated fundamentals from some mainstream articles, right? Here's Cointelegraph for you. This came out just a couple days ago, 4 days ago, January 18th, 2024. Why is the crypto market down today? Okay, check this out. Strong US dollar triggers, selling pressure in crypto. Trading volumes across the market have taken a hit due to a number of factors, including volatility, earnings seasonings, macroeconomic developments. What do we tell you guys to pay attention to, right? A strengthening US dollar is exerting selling pressure on Bitcoin. The US dollar index reversed from a 101 in early January and reached a notable stride, trading at the 103.500 on January 18th, while confidently deflecting the pressures of the 100-day blah, 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 talks about EMAs and all that crap. Okay. Then it goes on to say the robust strength in the dollar has been fueled by an increasing demand and rise in US Treasury yields. US retail sales rose higher. So it talks about how the data switched hands and it started to come out with a rebound, right? Which is also something that we told you all to pay attention to. Then it says there's also been a significant rise in the Treasury yields, which shows that markets are adjusting their bets on the Federal Reserve rate cutting roadmap. Interesting, right? So freaking almost 30 days later, the retail crowd and the mainstream hype catches up to CYPRX. We tried to tell you guys to pay attention to this stuff. So this just goes to show, remember, we're not here trying to toot our own horns. We're here to try to provide you all with value. And remember, back to the tweet that I started out with this video breakdown, you can make things crystal clear for people in the market through research, fundamentals, and technical analysis, but they still won't get it. Why? It's because they don't want to listen to you. They don't want to listen to somebody that has more experience than them because of their ego, because of their inability to think outside of themselves. You know how many people in the comments will say, oh, you're wrong. Oh, you're this. Oh, you're that. We don't sit here with a bias at CYPRX. We provide fundamentals and information, and we gather our analysis off of information. We don't gather our analysis based off of hope that Bitcoin is going to hit $100,000 because of some spot Bitcoin ETF approval. No, we look at macroeconomic conditions and we drive our analysis and our bias based off of what we think financial institutions, hedge funds, private family offices, and wealth managers are doing. And guess what these big, large financial institutions are doing? They are paying attention to macroeconomics, okay? They're paying attention to regulatory clarity. They're paying attention to the things that we are here at CYPRX, and that's why we're telling you all you should be paying attention to these things as well, not what the mainstream has been paying attention to for the past couple of months, right? So moving on, here goes another fundamental piece. This one was very interesting from CNBC. 2 important events this week, which could determine the future of the Fed rate cut policy. So this is the last 2 fundamental pieces that we're going to go over before we head into the TA. All right. So thank you all for sticking around. If you've enjoyed this video breakdown so far and you see that we provide value here at CYPRX, do us a favor, smash that thumbs up button, subscribe. If this is your first time here, definitely consider watching some previous video breakdowns that we've released on our YouTube platform. So that way you can see that we're just here trying and attempting to push out valued information that goes unnoticed to the mainstream media platforms. So here it goes on to say, and this is what we're going to do. We're going to forward look into next week. Markets have been less convinced that the Federal Reserve is ready to press the button on interest rate cuts, an issue that cuts the heart of where the economy and stocks are headed. Two big economic reports coming up this week could go a long way towards determining at least which way the central bank policymakers could lean and how markets might react to a turn in monetary policy. Now, I understand if you're watching this video breakdown or if you're listening on the X space, this is boring as heck. There's a lot of vocabulary thrown around, and I get it, right? Nobody has time to understand this stuff. I have a 9 to 5 job. I can't. I just want a dollar cost average in and become a millionaire overnight. I promise you, if you don't start understanding this stuff, you're going to continue to experience losses in the market. Only when I started understanding when financial institutions were getting involved and when they weren't is when I started to see an uptick or a rising equity curve in my portfolio, because I started to track when was a good time to plug capital into the market and when was a good time not to. In our private CYPRX Discord, all the way back in December, we had put out a list of dollar cost average positions in crypto that we were going to be looking to plug capital into the market if we saw all of these things that we're going over today come into fruition, creating sell pressure on crypto, giving us a nice decline for discounted entries. Now that the market is discounted, we are starting to facilitate capital in the market, not when everybody else is chasing. So even though if the market declines from where it's at now, we are still here at CYPRX not buying at tops. And that's the most important thing as an investor, is that you're getting assets that have value for the future at a discounted price, not at a premium. Okay, so just keep that in mind. Two big economic reports coming up this week. Investors will get their first look at the broad picture of the fourth quarter economic growth for 2023 when the Commerce Department releases its initial gross domestic product, i.e. GDP, estimate on Thursday. Economists surveyed by Dow Jones are expecting the total of goods and service produced in the U.S. economy to have grown at a 1.7% pace for the final 3 months of 2023. A day later, the Commerce Department will release the December reading on the Personal Consumption Expenditures Price Index, or core PCE, a favorite Fed inflation gauge. This is the primary inflation gauge for the Federal Reserve, so this is extremely important to be paying attention to, considering the fact that the FOMC release is next week. The consensus expectation for the core PCE prices, which include the volatile food and energy components, is 0.2% growth for the month and 3% for the full year. So we're expecting an uptick, presumably, in inflation. Both data points should garner a lot of attention, particularly the inflation numbers, which have been trending towards the Fed's 2% goal, but aren't there yet. That's important because, again, remember, rate cuts have been driving greed and demand for risk assets. If that narrative starts to fade, which it has been, most likely that's going to lead to dollar strength, a resurgence, an uptick in dollar, and a decline or further pullback in digital assets. Now, in my personal opinion, a pullback, considering the fact that we could be in a bull market cycle as of right now, is healthy. It's not a bad thing to see a crash or a decline in crypto prices. You, as an investor, hopefully were not buying in December when the market was at its all-time high for 2023 on the greed index, right? And you were maybe potentially paying attention to some of the things that we've been trying and attempting to show you all. That's the thing that everybody should be watching. Look at this. It says to determine what the Fed's rate path will be and end up being. Chicago Fed President Austin Goolsbee said during an interview Friday on CNBC, it's not about secret meetings or decisions. It's fundamentally about the data and what will enable us to become less restrictive if we have clear evidence that we're on the path to get inflation back to target. So what here at CYPRX had we been telling you all to pay attention to? The data, right? What is the freaking Federal Reserve president telling you to pay attention to that has many more credentials than I myself? The data, right? You guys see how that kind of links up? Okay. As Friday afternoon trading in the Fed funds future markets equated to virtually no chance of the rate setting, Federal Open Market Committee will cut on its January 30th to 31st meeting, according to the CME Group. Data is indicating through its FedWatch tool, check this out, that there's nothing new there. With the odds for a reduction at the March meeting fell, this is what's important, 47.2% chance of a rate cut, which was a steep slide as we ended 2023 from the 81% chance, okay, that the Fed was going to cut rates this year. So that is why we've seen a decline in the digital asset space, yet everybody thinks it's because of the spot Bitcoin ETFs not going crazy, right? Banks not buying Bitcoin because it got approved, blah, 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 blah. No, it's because of the macro conditions. Remember that these large financial institutions, they manage risk on and risk off market move. They're not going to put their money into a declining asset because the dollar is gaining strength due to potential higher interest rates remaining on the table longer. Yeah, you guys see how that works? It's very simple to understand. You just have to take the time to understand it. That's it. And then when you do, you never really have to relearn it. It's like riding a bike, right? Once you learn it once, you only have to learn it once, and then you implement it in your trading and investing career for the rest of your life. So, what are we going to be paying attention to? Again, just like the CNBC article mentioned, we have GDP coming out on Thursday, unemployment claims. I'm not going to bother with that right now to bore you guys to death. Again, we cover this in our CYPRX private community before the information comes out. I give everybody in the CYPRX Discord a full fundamental breakdown and technical analysis update, along with dollar cost average positions in crypto that we're looking for. And obviously, of course, we trade forex here, so I give them a forex update as well. But our main focus will be on the core PCE price index, which is the Fed's primary inflation gauge, on Friday. And that's set to come out as of right now, according to forecasts, with a slight rebound. So be paying attention to that. Now let's go over to the technical analysis aspect of things, and let's just see what is on the potential for the cryptocurrency market and the DXY. So real quick, I just want to take your attention back to October on the US dollar. Same thing, vice versa. We're going to look at October on Bitcoin. So, interestingly enough, when the whole narrative that the Federal Reserve was going to start to cut rates in 2024 came into play, and we had rate cut bets starting to kind of end the year 2023, was around the same exact time that the dollar started to decline due to dwindling economic activity and lower inflation readings. And you can see that the dollar declined all the way down to roughly around the 100.500 psychological level. That, at the same time, was the moment that Bitcoin in October bottomed out roughly at around 25 to 26,000. And we saw that significant increase in Bitcoin. Obviously, of course, all at the same time, what was the mainstream media focusing your attention on? The Bitcoin ETF, right? Interestingly enough, look at this. I mean, you literally cannot make this up, okay? Once the Federal Reserve rate cut narrative started to fade and the dollar broke back above the historical psychological level that I mentioned to you guys of the 102.800, that's where the dollar started to decline and we started to see an increased demand in risk assets. Well, interestingly enough, when the dollar broke back above the 102.800 was the same exact day that the Bitcoin ETF got approved. Bitcoin sold off and the dollar broke above that historical psychological level, gaining strength. Where at the same time, what did we see? We saw the rate cut narrative starting to fade. And now we have all of this data set to come out for the US. So be paying attention to the charts literally tell you everything. Okay. So here at CYPRX, what were we gauging? We were saying to ourselves, if the dollar can break back above the 102.800, we're not going to implement capital into the space. We're going to wait, sit on our hands, and see if we can get a further decline. And we got that to the T, and we tried to tell you guys in advance that that could potentially take place, right? I literally told you guys back on December 19th that that was a potential outcome to be paying attention to. Okay. So now let's go over some potential forward looking and price action. If the dollar, let's say, worst case scenario for digital assets and crypto is that we see higher inflation readings and optimistic data continue to drive demand back for the US dollar. We see the dollar maintain strength above the 102.800 and start to scale back up to 104, potentially even heading into 105, clearing out some of these lower highs and bearish price action that was printed on the dollar from previous pessimistic and declining inflation readings. So that would be something looking like this, right? A failure to break back beneath the 102, creating a higher low in comparison to where this low was created, and traversing back up into the 104, breaking this previous bearish market structure, we're expecting Bitcoin to come down into at least 38 to 37,000 range to retest this demand zone. So that's the first area of interest. As long as the dollar holds above the 102.8 and starts to break back above the 104, creating a further risk-off market mood and selling pressure on digital assets. And this goes for the vast majority of other digital assets as well, okay? Excluding a handful of different altcoins that could potentially still see some outflows of Bitcoin and profit taking and inflow into altcoins, okay? This is just the overall cryptocurrency market asset class as a whole. Dollar strength usually tends to weigh on risk assets, creating a risk-off market mood. So our first area of interest on Bitcoin will be that 38,000, 37,000 range or previous demand range, as long as dollar can break back above the 104 and start to make its way towards 105. Okay, I'll stop there. I'll give you guys a market update if that happens. So that'll be our first area of interest. Let's talk about best case scenario. Okay, let's go the inverse, right? So let's say the data comes out pessimistic on Thursday and we see a decline in inflation or the same as previous reading, and we see the dollar fail to break above the 104, clearing out this previous lower high that was induced by bad economic data and lower inflation readings that created a sell-off on the dollar all the way down to the 100.5 psychological level. And we see a break back below or heading towards the 102.800, that would most likely benefit the risk market mood. Seeing something like this is what we would want to see as risk asset investors. Okay. The dollar declining back down below the 102.800, failing to clear out this previous lower high or break above the 104. And that would therefore, in our personal opinion here at CYPRX, create some type of bullish activity on Bitcoin, maybe potentially a revisit of the 39,000 to clear out some leverage buyers underneath of these lows, and then potentially traversing back up into like 43,000 to maybe even 44,000. Right? So that's what we're looking at for intraday plays as of right now. Dollar strength would most likely continue to weigh on risk asset classes as a whole. Anything above 104 to 105 is going to create sell pressure on digital assets, i.e. risk off market mood, pullback in stocks, right? Things of that nature. So that's what we're paying attention to. These are the major psychological levels that we have alarms set for on the dollar to be paying attention to potential discounted opportunities in crypto. So just to recover that, any break above the 104 heading towards 105 on the dollar, i.e. strength, optimistic data, and an increase in inflation, rate cut narratives fading off the table would create further sell pressure on crypto and present further discounted opportunities for potential dollar cost averagers or potentially taking leverage buy positions. Obviously, of course, invest in your own risk for leverage traders in crypto. Okay. That's what we're going to be paying attention to here at CYPRX. Inversely, what we would want to see as risk asset investors, because I'm tired of this bear market, and just like you, I'm sitting here with a large amount of crypto holdings, and I want to see a return on my investment that I've been investing in and accumulating for the past year and a half that we've been in this bear market, right? Best case scenario for risk assets is we come back below the 102.8 and we start to head back down towards this previous low, which I don't think is going to happen. I think that we're either going to get the same inflation reading from previous or we're going to get a higher inflation reading. I don't think we're going to see dollar weakness, but if we do and we break back below that 102.800, that's going to prompt a risk on market mood. That 40, what was it, 42, 47.2% chance of a Fed rate cut is going to go back slightly to an increase, maybe increasing back to like a 57 to a 60% chance if we see lower inflation readings. And that's going to weigh on the dollar and prompt a risk on market mood. Therefore, Bitcoin would most likely bottom out roughly at around 39 to 38,000. If it does break 40,000 and start to come back up into the highs of roughly around 43 to 44,000, looking at this area here, right? So let's see how this data comes out on Thursday and Friday. Let's be dependent on data. Let's be reactive to market conditions. Let's not marry biases. And again, pay attention. If you're not subscribed to the platforms, you're not following on X, or you're not part of the CYPRX community, consider subscribing, consider joining our community so that way you stay ahead of the curve with all of these market fundamentals as we update everybody on a daily and weekly basis. Many blessings to you guys. I hope that you all enjoyed this informative video breakdown. I know that it was a little bit of a longer one. And for those of you that are still here, you are the true market participants that are most likely going to last the longest. Why? Because you actually care about this stuff. If you lasted this long and you're still here, then you care somewhat about this information. Either most likely it's because you want to learn more, or it's because you've actually been paying attention and benefiting from this info. And if that's you, again, do us a favor, smash that thumbs up button, subscribe, and I will see you all in the next video breakdown.